This is an alert, 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 alert. You get what I'm saying? The debt ceiling. What it is, the U.S. has a budget. We have limits in place to take care of our responsibilities and our bills. We have payments in place. The debt ceiling, if it's not raised, okay, or extended, which is more than likely, it will be catastrophic to the market. It will be so terrible for the market. You'll think today was like a candy bar or something like that, a cartoon. That's how bad it's going to get. So the key dates to watch for with the debt ceiling is the government has until the end of business on Friday to create a temporary fix or negotiate a deal in place, all right? If not, the U.S. is set to run out of money on October 18th. That is a major, major deal. We've never missed any type of interest or debt payment. And let me simplify it for you, okay? Like, say you're in New York City, right? You're there for New Year's, the ball's dropping, right? And they say, okay, we need extra officers. We need extra security just in case there are any threats. So the mayor says, okay, how much overtime? Okay, let me okay it. And he signs off on the overtime. That is what the government needs to do. Do not embarrass our country. Speaking of politicians being embarrassed, we had two Fed chairmen resign their posts recently when it was reported they did not report their trades. We have another senator who wants to introduce a bill prohibiting the Fed's employees from trading while they're in their current positions. Thank you. How about not taking advantage of your position in politics? How about getting something done for our country and not embarrassing us? I mean, we see what happens all over the world and what it does to the economy. The Chinese market dropped 40% when China is effing around with them. All right. Do we want our country to default on a debt payment and then all over the world it'll be catastrophic? All right. So other factors driving the market right now. The 10-year Treasury note, which is inflation, it's 155 or 156. It is on its way to 2% by the end of the year. That is what the Fed wants. Now, let me tell you how to make money off of that, okay? Now, I've spoken about it before. There are two interest rate plays that I do, TBT and TMV. So look them up, see the charts, see how they move with interest rates. Another good play are banking stocks with interest rates as they make a bigger spread. What else is going on? End of quarter three. All right. So banks, institutions, September 30th, they have to get it? They have to fix their balance sheets, meaning they report their positions and they say what stocks that they're into. Now, guess what? If you're in a shitty stock and you lost a ton of money, do you want it on your books at the end of September saying, yes, at the end of quarter three, I have 2.3% in this piece of shit stock? No, not at all. So they want to remove all the bad stuff from their books and they want to put on the good stuff. So if you've seen stocks that are up 20, 25%, there's a chance that they go even higher right now. All right. So anyway, what else is going on? Oh, the government, reverse repos. This is how the federal government supports our market. They buy bonds, they buy other things, reverse repos. They bought today for $1.3 trillion worth. Okay, trillion. That's 12 straight days, over $1 trillion. Now, this is the same government that is supporting our overinflated market right now. And you understand who knows that, right? The banks, the institutions, they know that the government's supporting that. So once the repos go down and the government's not supporting the market's going to go to a lower level. So when you see people buying out SPY puts or UVXY calls, yes, it makes sense. Now, I like to day trade, which I'll get into later. All right, let's talk about some leaked documents because we all love AMC and we all love to hear about what's going on with GameStop. So real funny story with AMC first. All right, let's talk about AMC Adam. Somebody hacked his email and sent an email to the CEO of HBO saying, yo, please take the pressure off. You're crushing our movie theaters. The CEO of HBO thought it was real and did an internal memo to his employees saying, let's finish him off. Let's keep our foot on AMC's neck. Now, what was left out of the conversation is the email that came from AMC Adam said, I'll do anything. I would suck your dick. And the CEO of HBO didn't even realize that? I mean, crazy. Of course somebody hacked his account. CEOs don't speak like that. All right, so let's talk about GameStop real quick, okay? Because that's more interesting. You've got Ken Griffin, who is the CEO of Citadel, right? And then you've got Vlad, who's the CEO of Robinhood. So they're having conversation in February about the same time that you were prohibited from buying or shorting GameStop stock, or you're providing, so that was pushing it up at the time. Sorry, I screwed that one up. But you guys know what I'm talking about. The point was they were having interaction. They were talking not on a daily basis, but they spoke at least twice. And then they had inter-office memorandum going around that they were having conversations with each other. So that is something called collusion. Now, let me simplify what collusion is so you understand how they're cheating you. It would be like all dairy farmers getting together saying, we're going to spill half of our milk out that we're milking from our cows so that we don't sell it. And the milk prices would go up more than 2 times. All right. So that's what they're doing. Now, it's all allegedly is what I'm speaking about. Like allegedly for my birthday next year, I'm going to be 48 years old. But if it never happens, I'll only be 47 for life. So allegedly, Ken Griffin is not guilty, but we'll see how this plays out because there's a court case. Okay, so next we're going to hit up my watch list. We're going to get to a couple of questions. This yesterday, I gave you guys a bunch of stocks. Now, the stocks I spoke about yesterday, and I'll go over a couple of them because they moved today in the direction I told you. I said if we have a shitty market, there are some 4-letter stocks that are going to move down hard. So I'm going to recap a couple of stocks. All right. And then we're going to go over what's going on in the market right now. Because I told you a few days ago, last Tuesday, I told you yesterday, I told you on Thursday, there's a rotation, meaning money is leaving tech and going into Dow stocks. And money is leaving tech because the 10-year is going up. So if you think certain tech stocks are done throwing up on themselves and going down, you are incorrect. You have Apple, for instance. When Apple was 155, I told people there was more chance Apple was going to 150 than there was going to 160. Then it hit 148, and people said, can we buy Apple right now? And I said there's more chance of Apple going to 140 than it's going back to 150. And case in point, Apple was 142 this morning, spiked to 144, and it's probably back at 142 now. I actually don't have Apple on the top of my watch list because it is not most important, but I will definitely look it up because I definitely think Apple's going to drop under 140. Today it was 141.91 it finished at, which is a little off the low. See, that's the other thing about the market. The way the market closed makes me more apprehensive for tomorrow. Now, I tell everybody, generally after a big slide day like today, we have a bounce back. And I positioned myself with a few $1,000s worth of options to take advantage of that bounce back. Now, towards the end of the day, when we had that sell-off at like 330, 345, and the market finished basically at its lowest point, the market is very concerned about the debt ceiling. We're not concerned about China. We're not concerned about supply chain right now. We're not concerned about oil or weather or anything catastrophic like that. We are solely concerned with the debt ceiling and what is likely going to happen. And I'm going to tell you this first, and you haven't heard it from any other gurus, all right? But here's what the politicians are going to get together. They're going to get together, and Friday they're going to talk into the evening, and they're going to say we need to come up with a solution. And the only solution they're going to come up with is to extend the debt ceiling, to find a Band-Aid to put on it by giving the government a certain amount of money to carry it forward another 1 week or possibly 2 weeks. So that worries me. That's what the concern is about. That's why the UVXY is spiking. For that, I took some profit today, and then I bought some more puts when it spiked past 24 right at the end of the day, and I was like, I'll re-enter the same position. Again, I took my 30%, and I took my 30% from one other position today, and I made it a winning day. I started today by selling my QS options and by selling LAC options at a minus 22%. So I was down like $1,000, and I was like, see, I don't play big money anymore. There's no reason for me to start a day and possibly be wrong and be down like 38,000. And then instead of focusing on my platform and focusing on which direction the market's going in, I'm focusing on how to make back my 38,000. There's no need for that. So I tell you guys, it's risk versus reward. Don't overextend yourself, okay? I'm going to get to a few stocks, and I want to get to questions. You know what? Let's get to some questions first. You guys have been here patiently enough. I skipped them yesterday because it was more important to get to certain stocks. And it is important today. But we've got 30 minutes. I've got over 20 minutes left. I'd like to do 10 minutes of questions so I don't leave anybody out. And then I'd like to get into my watch list again. But instead of that, we're just going to go to, obviously we're having some problems with the questions. So I'm just going to go to my watch list. So I'm going to add a new stock to the top of the watch list. This one is for a turnaround. It has not happened yet. Somebody in my lifetime membership pointed this out. He asked me what I thought of this stock. I told him not yet. It can still go down to $77. The stock is ES. It's Eversource, okay? Now, if you look at the 1 month chart, you'll look at it with me. Again, there's been about 4 inflow days and maybe 16 outflow days. It looks like it's bottoming out. But if the market gets ugly for a couple more days this week, okay, which is a possibility, understand if they don't find a fix for the debt ceiling, and we're what today? Tuesday, so tomorrow's Wednesday, they continue talking about it. Remember, they have to do it by Friday, close of business. So it's likely they'll just meander back and forth. The market will probably drop. So I'm probably going to have to switch out some of my positions. So if you're watching me right now, congratulations, because you're going to crush it the rest of the week. Again, we don't overextend ourselves, but we can easily take a few $100 loss here, re-enter into a different position that should correlate better with a negative market, and then crush it. So if you're on the platform, I'll be talking about that tomorrow morning. Okay, what do I think about PayPal? I'm glad you mentioned PayPal. The first thing I do before I comment on PayPal is I like to look at crypto and see where crypto's at. All right, crypto looks like it's going to, it looks pretty sketchy right now. And if crypto falls another 3,000, which it could do to 38, I'm talking about Bitcoin specifically. If Bitcoin drops to 38,000, then PayPal could be in trouble. And we know that tech stocks are already in trouble. So most of my thoughts right now are going to be negative, but I'm going to look at PayPal and tell you what I see. Yeah, I mean, there was heavy selling the last 2 days, so they kind of prepared themselves. From 276, they pushed it to 262. Again, if we see what we saw today, tomorrow, which is a possibility, okay? You guys are more or less here for my predictions, I believe, my thought and my take on the market. So I'm going to tell you right now, the market could be in trouble. The shit that we saw today, and the market, I believe, was off, what, like 400 and 500 points? We could see something identical covering the next 2 days. So if you combine Wednesday and Thursday in the market, we might see a 600-point drop for the Dow and potentially a 500-point drop for tech stocks, okay? Keep in mind, the Dow is at like 31,000 or above 30,000, and the NASDAQ is above 14,000. So when you get almost an even drop, it's more substantial for the NASDAQ. The NASDAQ was off 2.8% today, and the Dow was off like 1.4%. So it was like cut in half, all right? So yeah, PayPal, yeah, unfortunately, I'm going to tell you the downside of PayPal. It broke all support for the last 3 months, and the next downside would be right about 258, and it did not touch 258 today. It touched 261. So there's a good down chance that PayPal touches 258 tomorrow. Now, understand this. If the market opens red and these numbers of these stocks get hit, the UVXY will spike another 14%. My position that I'm carrying over until tomorrow with puts, if I think that will happen, I will sell probably after market open because it usually squiggles up and down. There's no sense of direction. However, if I believe the market will sell off tomorrow and substantially, I will exit out of my position. In fact, I will probably flip it. All right, so that's one strategy in my mind. I'm not saying I'm doing that. I'm saying have a strategy always. So yeah, PayPal on the downside could hit 258 in the morning, drop to about 250, maybe even 252 tomorrow if it's an ugly day. Now, if we get a bounce tomorrow, which is what I'm hoping for, I'm hoping the politicians do something and there's some positive talks and we get a bounce. If you get a bounce, PayPal can go to 268. So yeah, how sick is that? It can go from 252 to 268. That's a huge move. That's like 8%. All right, let's get another question, please. Okay. Micron had good earnings but dropped. Where do I see it going? Again, it's the chip, the supply issue. If they are so far behind, I mean, I wish they told us the truth. With these chips and the demand of the chips and everything is taking a chip from your washing machine to your dryer to your car. I mean, you think Ford and GM and Tesla are out on their own needing these chips? No, all the washing machine manufacturers, everything needs a chip. The drones that we fly around, they need chips. The computers that run our airplanes for Boeing, they need chips. The missiles that North Korea likes to fire into Japan and over into the Japanese Sea, they need chips. So let's look at Micron. I do love the chip sector. Don't get me wrong. If I'm going to be buying something for the long haul right now, I'm going to go into Micron. I'm going to buy some AMD. I'm going to buy some STX. I might even buy some Western Digital. All right, there's 4 chip stocks. Now, if you're looking for instant returns, you don't want to say, okay, I'm buying them today. But if you're thinking to yourself, I'm going to buy them in a year from now, they're going to be up 40%. Darn tootin', they're going to be up 40%. If you can make 40% in a year, in fact, snapshot this. You guys love when I do this. Snapshot this moment. Micron, without even looking right now, will be up 40% by 12 months from now, okay? And 40% in his year is great. So let me look at Micron right now. I'm pretty sure I'm going to see demand. However, you know, we had 4 straight inflow days of demand, and Micron went from like $68 to probably $76. Today was the first selling day in a while. So yeah, why did it go? Because the market tanked and people think the market's going to get uglier. If the market gets uglier, even if Micron made a ton of money, then it's still going to go visit $68 or $70 again, and it's at 73. So you're talking about 5%. So when I mentioned 5% on PayPal, 5% perhaps on Micron, if the market is red Wednesday and Thursday, which is a strong possibility, and that'll probably carry over until Friday. However, you know, they can come out with a decision anytime saying, hey, we got together, we're doing a bipartisan agreement to extend the debt ceiling. What they're going to do is they're probably going to extend it out 2 weeks. Let's get another question. All right, CEI. I don't know. I thought that one dude was killing it in CEI, right? It was like 250. Yeah, it went up another, 18% today. Let's see what today's chart looks like. Opened at 338 because people want to buy that. It dropped to 262, and people are buying that. That's a green energy play. We've been talking about it since $1.26. Then it bumped to like $1.50. Then it just shot up to 208. From 208, I think it went to 250, and now we're at 322. So that's 4 days later. Let's look at the 1 month chart. Yep, 4 straight days ever since it was around 136. Heavy inflow. I mean, 746 million was the volume on that one. That's pretty substantial. And until I see otherwise, so you look at the market, it was terrible today, and yet this was up 18%. So psychology of trading, what's going to happen? History is more than likely going to repeat itself. However, I'm not sure. If I was this company, I would probably do an offering. I would offer, they have 745 million shares traded today. I would drop 10 million, 20 million, 30 million shares on the market and pocket $100 million. The valuation of this company is 335 million. So they can add a third to their balance sheet all in cash by doing an offering. So please be careful there, Todd. All right, let's get another question up about a stock or position. All right, thoughts on Tesla. So even with the market taking a dump, let me just pull up Tesla. The thing is, people still want Tesla. They still want the stock. Jesus Christ, I can't even bring up Tesla. I can't spell, I think, T-S-L-A, no? Yeah, Tesla, there we go. I don't know what I was doing. All right, so you have to look at inflow, look at the 1 month chart, right? Oh, by the way, I see someone gave a thumbs up. Please, everything is algorithm driven. So once we're done, if I did not get to your question, please type it underneath. I will do my best to answer you or point you in the right direction. Likewise, please give a thumbs up. If you can share the video with someone, please do. We've changed the name of the channel to Marketing Matt because I'm looking to simplify for you guys. That's what I'm doing. Or maybe we didn't change the name. I thought we did, but I'm getting strange looks. Anyway, Tesla, huge inflow days, 2 days in a row, selling off today. It went down to I thought it was 771 was the lowest, but it's actually 766 was the lowest. So again, if the market struggles tomorrow, this will go under 766. Do not be surprised. The number that's coming to mind is 748. So if the market struggles this week, Tesla will go down and hit 748, dropping at least 3 or 4%. Now, if I hope, and I'm correct, and the market somehow flips around by the morning, again, I think it's all about the debt ceiling. But Tesla could easily, the chart shows it could pop right back and break 800. So understand, there's a huge variance there. All right, let's get to another question if Carlos will have me. Hey, Matt, what are my thoughts on CCI? It's been falling for 7 straight days. All right, so CCI is an industrial play, Crown Castle. I would rather, you know what, CCI is not bad. It's a good one because there was a huge volume today. And let me tell you who was buying today. Let me just confirm it. Yep, and it was the institutions. And that's all I need to do is look at this and tell you, actually, I'm moving this one to the top of my watch list because this can easily bounce back 8%. Say the market is horrible tomorrow and then rights itself by the end of the week. I would like to have a position in there. So thank you for pointing that, Diego, because the volume was great today and there was actually a little more inflow. So although people were selling into this shit market, more people were excited about buying that stock for $173, $174, $175. All right, let's get another question up there, please. All right, thoughts on AA. Again, another materials play. I heard that Pelosi wants the infrastructure bill signed by Thursday. So I bet there's a whole lot of negotiation between the infrastructure bill and the other bill they want to bring in to give Americans more money and support businesses, and the debt ceiling. And there will be a compromise in my mind. Now, the question is, does it happen by Friday or not? So right now, and the people that don't think it's going to happen by Friday are going to over-lever themselves in the market. They're trying to steal all our money. There are going to be institutions, and they have insiders. They have people, lobbyists, and other people in Washington listening with their ear to the door, seeing if there's going to be a deal. That's who's trading the market today. These hedge funds, these institutions, they're in bed with the lobbyists. So if you don't know that, that's the market manipulation, which makes it, when it's political, it makes it so much harder to gauge the market because there is inside information. These guys trade illegally. They speak illegally. All of it is to manipulate and steal our money. I mentioned that I think it's 80% of the money's market belongs to the hedge funds and big money. 20% belongs to 30 to 50 million retail traders like you and I. And they're trying to steal. The institutions are trying to steal. The hedge funds are trying to steal. The politicians are trading. They're stealing. So it doesn't surprise me if they leak information about the deal or not deal and the debt ceiling. But I do know that they are worrying the retail trader. So please, that is why we prepare ourselves. That's why we always have a chess move. We're either making this move or that move. We're either on attack or retreat, but we always have guidance. All right, so Alcoa. Oh, it's all $51. That's awesome. Yeah, I love Alcoa. I mentioned that at $44, which was exactly 5 days ago. So the fact that it's up 15% since I mentioned it, and I said I like that for my materials play, I'm happy about that. Yeah, chart looks good. It is at a top, but you have to put Alcoa in with a couple of these other materials plays. You will see them go up, and if Alcoa breaks through, I would see $55 within a week or two. All right, which is like another 8% move to the upside. Thank you so much, Alejandro. Love you, man. All right, next question. All right, it's a cannabis thing. ACB had horrible earnings but rallied. Can I explain it? All right, so first, I can explain that sometimes when companies have earnings, they do the complete opposite. You like earnings killed it. The stock's going to go through the roof and it goes negative. They had terrible earnings and the stock rallied today. So can I explain it? I cannot. It doesn't logically make sense. They could have said something about the industry's growth and how even though they're losing money, next year they're going to be more viable and they're going to have a greater audience. Something to that extent probably was said. That's how they mask the problem, okay? Because not only do institutions lie to you, but these companies that are publicly traded, they lie to us. They say, yeah, earnings are a little off, and they try and shield it and hide it, okay? So maybe they were trying to say something good. However, here's what easily could have happened, all right? Because we know it's retail owned, I believe. Let's look this up. I want to give you all the facts. So these are the things I look at when you tell me something like that. Aurora Cannabis, heavy buying today, some institutional buying today. I'm going to go to the ownership of the company. So the profile. And we're going to see that institutions only own 20%. That is not a good thing for the stock because I'm going to talk about the psychology of trading. If you understand that institutions only own 20% and those institutions might be locked in for a little while, they're going to be holding. So retail traders are pushing it up. Now, if the market gets ugly tomorrow, I would be careful because whatever that made today, let's just look it up right now. You're telling me it went up today. Yeah, heavy buying, 6.66%, 666, sign of the devil. If the market goes down today, I could see this dropping to like $6.20. If the market is strong tomorrow, shoot, they might try and push this up to what, $8 or something to that extent. That's where it used to ride, right? Yeah, people like cannabis. I mean, they like the stocks. I tell you guys, no one's buying cannabis at these shops. I mean, they're not doing billions and billions. What they need to do, doesn't make sense to me. All right, next question, please. All right, thoughts on JCS. Let's see what JCS is. I don't know why I just put that in my watch list. I'm definitely not putting Aurora Cannabis in my watch list. But I guess I will leave it tomorrow just to see if I'm right that it should come down to earth a little. Okay, JCS, somebody was buying. They were buying 913. Light volume. It probably has a low market cap. Yeah, it's got a 90 million market cap. It's not a real stock. It's a manipulated stock. Someone thought the true value was $9. They put a lot of money in it. 914. They're holding a lot of shares. Now here's where they start playing around. So if you want to look at a stock that gets manipulated, JCS. I'm not saying it won't go up or down because there's extremely light volume, but I'm telling you, whoever made the purchase on 914 had all intentions to manipulate the stock. They pushed it up to $9. Their exit strategy will be to get some interest in it one day. When it spikes to $11 or $11.50, they will sell their entire position. So if you're in that stock, you must get out. You could easily ride their coattails, JCS. You could ride their coattails, and when they get the pop to 11, just make sure you're the first one out and you're out before them. But right now, volume's really light, outflow. So if the market's still tough, it's going to still be outflow, light volume. You'll see exactly what you saw today. It'll drop 47 cents tomorrow and go to $8.80. Again, if the market is beat up tomorrow. Let's get another one, please. All right, Brant. Sortie calls a good play for next week. Without looking, I don't know what that business is or that company. I will tell you it's a 4-letter stock, which makes it a NASDAQ stock. If the 10-year goes up, if there's trouble with the debt ceiling and the NASDAQ continues to get beat up, a 4-letter stock, without even looking, will have trouble. So I wouldn't say calls are good. I will look at it because there are sometimes stocks that surprise me. You guys mentioned a stock, and just based on the analytics, it should be one place, and it's not. Oh, I'm sorry. Pro shares ultra short Russell. That's why I don't trade the Russell at all. So yeah, ultra short, exactly. I mean, again, if the market sells off, yes. So a good call for the next few days, yes. You nailed it, dude. I'm sorry for looking foolish there. Transparent. I never heard of this before. I'm not lying. I don't play around with the Russell. The Russell's what? IMW, right? Is that the Russell? And then there's the Russell 1000, 2000, 3000. There are so many ETFs. You understand who makes the ETFs, right? The institutions. They create an ETF, an exchange-traded fund. Hey, we're making a Bitcoin fund. Hey, we're making this fund. Hey, we're making an inverse Russell fund. Hey, we're making a Russell 3000 fund. Now what do? They charge expenses to manage these funds. They buy and sell shares based on the market direction to manage the funds, and they charge you money. That is just another revenue source for the institutions. So if you ever wondered to yourself, God damn, there are a lot of ETFs out there. Why are there so many exchange-traded funds? Because if there's a need, they will create a derivative for it. Remember Michael Burry doing the Big Short, and they created a derivative for everything, the housing market, and then they took the piece of poop bonds and they put them all together in the housing thing, and then they create another derivative for that derivative. They just create stuff to steal your money. It never changes. It just changes. The concept changes, but they're out to steal your money. Let's get another question. It's amazing how I always find my way back to the institutions and hedge funds and how they're stealing your money. Maybe because it's so prevalent. Today, I included the politicians. I wish I knew the names of those two politicians because for my 1 million followers, I would love for them to call those politicians. Carlos didn't laugh. He must be pissed. All right, Matt, you're an old friend. Trit is making moves again. Any interest in her? Yeah, sure. When they come out with earnings, I said their earnings, when they're supposed to come out with them in December of last year, would be like off the charts. It's a year later, and they're still not coming out with earnings. That would scare me. Now, I did mention the stock was easily manipulated. So when it was pushing $6.38 yesterday, I told you guys, get out. Because if I wanted to push this stock down, I could push it under $6. And where did it close yesterday? At $5.98. Where was it today? That'll be interesting. Let's see where it is today. TRIT. And let's see where the volume was, because the volume was good yesterday, and today it's a fraction again. So, yeah, it doesn't surprise me it lost 4% today. Guess what's going to happen to Trit tomorrow? If it has volume of 500,000 or under, it's going to lose another 20 cents. You're going to be back at 550, and by Thursday, you'll be at 540. Okay? There you go. Any spike on Trit, you take profit and run. Next question, please. SQ will survive the week. Oh, that's interesting. Because I know SQ like family. I know how it moves. Today, I was just shocked at the movement. And guess what? If crypto struggles, SQ is going to struggle. If the market struggles, SQ is going to struggle. So I wouldn't be on calls. If I were going to make a bet on any of these companies that we're talking about, I'd rather be on the put side because it's more likely that the stock will go down. Now, I'm hoping for a bounce tomorrow so I can get into some put contracts for the end of the week. And I'm also hoping for a bounce tomorrow so my UVXY goes down. But right now, if I was to put a 50-50 target on it, I don't know what futures is doing. I don't pay that much interest until I see where the Chinese market is and where futures are tomorrow morning at around 4 a.m. All right, let's get another one up there, please. Oh, I didn't tell you if it's going to survive or not. Yeah, I did. I kind of did. It does not look good. Let me see where crypto's at right now. I almost bought some crypto today, and I'm talking about altcoins and some other stuff. And I didn't because my price didn't get executed. And then I thought to myself, if the market falls apart today, which I kind of think will, won't that hurt crypto as well? And I was like, of course it'll hurt crypto. Just stay away, Matt. So anyway, that's what I chose to do. All right, Bitcoin's 41.7. Yeah, I mean, if it breaks 40,000 to the downside, you're in trouble. Doge is right at 20. Shiba stands for the shit coin, okay? Just so everybody knows what that is. All right, my man Larry Jones said that. He said it when we were interviewing together. Said 2 coins to stay away from: Doge and Shiba. I know some people disagree. I like Poly, which is Matic. I like XRP. That's what I almost bought this morning, but I did not. All right, man. Everybody, thank you for watching. We'll do last question here. USOI. And please, everybody, if you get some content from this, share the video. I mentioned some stocks yesterday, like Affirm, AFRM, that if we were red, you'd see it off 8 or 9%. Boom, there it was, off 8 or 9%. All right, USOI. Is that another ETF? Yep. Credit Suisse, X-Links, crude oil, ETF. So Credit Suisse is in there. So yes, oil is at a 3-month high right now. So oil companies, see, that's where we're at. If the market throws up on itself, oil's going to go down. If we have a catastrophe economically for the country and the market shed 10% because we can't raise the debt ceiling and we default, the markets will drop 10%. And this fund will go down. But if everything works out okay, yes, oil is going to continue to go higher. That's basically it. Easy as pie. We simplify. That's what we do. All right. See you guys later. Enjoy your evenings. Thank you for joining me.